Hey there, it's Jeremy Forcier, CrossCountry Mortgage. So I made this additional video here just to run you through what's really going on in the market right now, because we've seen that, hey, interest rates, are way up. And then over the last month and a half, it's, hey, interest rates are coming down. But it's a volatile market, and a lot of it just has to do with what expectations are in the market with inflation and housing cost versus what actually is happening in the market. So I want to share a chart with you that I'm just going to walk you through to show you what's happened over the last couple of weeks and what's happened over the last quarter. So inflation is basically the enemy of bonds, and bonds are what mortgage rates are based off of. So the higher the inflation rate, usually the worse off interest rates are going to be. They're going to continue to rise. The lower the inflation rate, the lower that mortgage interest rates tend to trend. So inflation is coming down off its peaks, which is great. Now, what's happening though is that if the market expects it to go lower than actually what it moved down to, there can be negative reactions in the interim, which can cause some volatility in interest rates. So if we take a look at this chart, this is a mortgage-backed security chart. And when you're looking at it, what you are going to see is an inverse chart. So what that means is that the higher up on this chart, the lower the interest rates are trending, and the lower on the chart, the higher that the interest rates are trending. So you can see here that we've, in the last quarter, which is what we're looking at, we've had a nice run in the upward price version of interest rates, which means that the rate you see and cost is lower. Okay. Now, since February 2nd, we have been in an upward moving interest rate trend again, which will be absolutely temporary, but it causes confusion when you're looking at interest rates strategy. What should I do? So if rates move from 7.5 off their peaks, down to 6.125 or 5.95 a few weeks ago, we're back up into that mid 6% range again when you're looking at interest rates. And that, once again, is because of inflation. Now, the good news on this is that regardless of what you end up financing and purchasing a home right now, come May 10th is a big date you should circle on your calendar. We're expecting that is when the largest inflation year-over-year decrease is going to take place based on what it was last year. And that's when we are expecting to see interest rates start to move down significantly at the end of the second quarter, third quarter, and throughout the rest of the year. So regardless of what we end up financing right now, we're going to end up automatically refinancing you in the future. So we have an agreement with all of our clients here at CrossCountry Mortgage. It's called the Inflation Buster. Maybe you've seen commercials about it. But when rates go down at any point in the next 24 months, and we expect it to happen this year, by the way, but if they go down at any point in the next 24 months, we will automatically refinance you for free to that lower rate. That means no processing fee, no underwriting fee, no appraisal fee. So we got you covered to purchase now. We'll come up with a great strategy to try to mitigate cost, because we know you're going to refinance in the future, and we'll take care of you then as well. So if you have any questions whatsoever, please feel free to reach out to us. We're here to serve you and want to make sure you have this information.